Hi, this is James Shrug at Westpac with the end of day report for Tuesday, the 21st of February. Well, it was all about the Greek bailout. Finally agreed overnight. The intention is to, in the short term at least, avoid the possibility that Greece might default as soon as March 20, when a 14 plus billion euro payment to creditors is due. But the longer-term aim was also, of course, to bring Greece debt down to more sustainable levels. They've certainly achieved the first of those objectives, but markets are now already questioning whether the bailout is in fact going to be sustainable, and then the debt levels that will result from this bailout package over the next few years, whether they will be sustainable and manageable by Greece or by the Greek government. I mean, these are concerns that we've continually raised. Our view is that the economic assumptions underpinning the bailout package aren't pessimistic enough, and that the austerity measures that are required to cut the budget deficit such that the bailout will be enough simply won't deliver. They won't deliver because they're impacting in such a negative way on an already depressed economy that the revenue side in particular is going to be particularly difficult to achieve the sort of results that are going to be required. So we're pessimistic that this bailout is going to be the event that rules a line under the Greek issue. As we've said many times before, we'll probably be back again here before too long talking about how Greece needs yet another bailout or a bigger bailout. And maybe the other governments in Europe might decide at that point that perhaps a default might be the best way to go. But that wasn't to be the case, at least this week. So anyway, markets have initially reacted a little bit positively to the news of the deal, but it certainly didn't last. No really important economic data today, a few bits and pieces here and there, but we had some earnings results in the US. Macy's and Home Depot beat analyst expectations, although Walmart disappointed. But those first two certainly gave the impression that the retail sector in the US is perhaps doing a little bit better than some of the official retail sales figures might have you believe. And so given all that, we've got a bit of a mix of results today, with European markets down about half an hour ahead of the close. The FTSE's down 0.13%, the French market's down 0.4%, and the German market's down 0.6% today. But as I speak, just heading into the US lunchtime, the Dow is up 0.3% at 12,988. Commodity markets have done pretty well today. Look, crude oil's up another 1.4% today, $104.69 a barrel. Gold up 1.8%, looking at $1,756 an ounce, and copper prices are up just over 3% at 382 cents a pound. So those commodities in particular are certainly benefiting from the notion that the Greek bailout would at least allow, in the short term, the global economy to continue functioning, Europe to make a contribution of sorts to that global growth story, and there's probably also some leftover bounce in there from the Chinese reserve ratio cut over the weekend. Despite commodities being higher, the Aussie dollar is a bit lower. It's at 1.0686 at the moment. It was trading above 1.07 against the US dollar earlier in the London session, but it's a little bit softer now as equity markets in Europe in particular have sold off again. That's about it really. Just worth mentioning, we've got the Westpac Melbourne Institute leading index coming out in today's Australian session, and also the wage cost index, which will provide an update on the pressures in the labour market. Okay, I'll leave it there. Back tomorrow, voice permitting.